Welcome to another episode of Purchase to Profits. I'm Seth Ferguson. Make sure you hit the subscribe button and ring the bell so you don't miss our daily interviews with successful real estate investors. Our guest today acquired her first investment property in 2011 and left the corporate world in 2014 when she became a full-time real estate investor. She utilizes her extensive knowledge of building and managing a portfolio to teach clients all about buy and hold investing. She teaches how to analyze potential properties, how to calculate your ROI, best practices from marketing and leasing your rental property, and how to be a landlord and build a portfolio. Brie Schmidt is managing broker at Second City Real Estate Brokerage, the co-founder of the Midwest Real Estate Networking Summit, and the president of TurnkeyReviews.com, the one-stop shop for passive investing in real estate across the United States. Brie, welcome to Purchase to Profits. It's great to have you on the show.
Thanks for having me.
Yeah, I'm really looking forward to this.
Awesome.
So to kick things off, do you want to tell us what your real estate goals are right now for your investments?
That's a hard question to answer because my real estate goals have changed.
That's good. Changing goals is good.
It is. So I've been doing this for about 7.5 years. And the goals I had in the beginning have adapted and evolved over time. So right now, my goals are really to kind of maybe structure things and figure out, where's my passion and how do I spend all my time doing what my passion is. So we'll kind of see what the future holds. But really it comes down to, like everyone else, financial independence, financial freedom to do what you want when you want to do it. And that's the life that I've built through real estate investing so far.
So when you say restructuring, is it, are you looking at restructuring how you manage your portfolio, or is it you pulling yourself out to get more time, or are you looking to pay down some debt? Like what kind of restructuring do you mean?
Well, maybe restructuring is not the right word. So we were talking, before the show about, what's your best deal? And my question too was like, I don't really know how to answer that because I've never sold anything.
Yeah.
Right. And so buy and hold is a very boring, it's a very boring way of doing things. You buy it, you wait 20, 30 years, and then you sell it. And that's when you really realize, what kind of deal it was or what kind of deal it is. So I've never sold anything, but now I'm considering selling some of my stuff. Gotcha. So that's what I like. So I've had an interesting journey the last year of researching things that are kind of way above my head. So things like, how do I really calculate my IRR, right? And what is my return on equity? And what does that mean when I compare that to my initial cap rate, right? And there's all these different financial metrics. So I actually went out and I was at an event in Philly, and they had an economist come speak. And the economist was saying a lot of really big words that I did not understand that I was writing down to go Google later. And so they have a charity auction, and the economist came up. So you could buy 3 hours of his time for a consultation. And that's exactly what I did. And so I had him review my portfolio, right? And try to explain these numbers that I should be looking at and why I should be looking at them. So now I'm kind of in the process of reanalyzing things and saying okay, this is a great property that might cash flow, but if I sold it, would I get 3 years of cash flow up front? Would I get 7 years of cash flow up front? At what point does it make sense to sell for me? So that's kind of where I'm at right now. So my goals are kind of hard to answer because I don't know what I'm doing yet, if that makes any sense.
That's a very honest answer.
My goals are not to have to work if I don't have to.
For sure.
But the problem I've discovered, so I started investing in 2011. I quit my job in 2014 to run the portfolio full time. I thought I would be one of those really just chill people who just sits in a cafe and reads a book on a, Tuesday afternoon. And I'm just not one of those people. So I subsequently started multiple businesses, all real estate involved, because I got bored. Right. So if I sell off this portfolio, what am I going to do with my time? I'm going to end up doing something else because I have to fill it with something.
Yeah.
And then what am I going to do with that money is also another problem. Right. That's the question that I get asked a lot when people ask me, oh, you're going to sell your portfolio. Well, what are you going to do? I also have no idea. Right. The market right now, as everyone knows, is not on the low end of the cycle. So, is there better investments to put it in? who knows? So that's what I'm kind of the journey I'm figuring out right now.
Yeah. And that's the $1 billion question that nobody knows the answer to. We don't have a
Right.
crystal ball. So yeah. So when you were building your portfolio, because you started in 2011, did you ever try maybe some strategies or doing things a certain way that you thought for sure would work, but turned out not to work very well?
I think it just depends, right? I think it depends on so buy and hold is one of those things that you don't really, it's not exciting, right? What's exciting is finding the deal
Yeah.
and doing the analysis and projections of like, hey, this property could be a great investment for me. The problem though is that you really don't know until you get like years into it what the reality of it is. So like I like the deal finding and the deal analysis part of things. For me, so I started in the Chicago market, which is I would classify it as an A-B type market. Price points are, around $500,000 for a 2 to 4 unit property. I started with a few properties there, and then I went into the Milwaukee market, which is more of a B/C class market, higher cash flow. Properties there for a 2 to 4 unit are probably in the $60,000 to $100,000 range. And that's when I started doing commercial loans. My lender also had an issue with, he knew what my plans were to buy a lot of properties. His point to me was, if you come to me every month for like a $60,000 loan, right, that's not going to be very, it's not going to help me, nor is it going to be a really good use of my time working with you to do this every other month. So we kind of hashed out a plan where I would try to buy at least $500,000 of property at once, which was typically, around 5 properties. Bundle them up as the package, even though I was buying from potentially 5 different sellers, and then doing one closing at a time. So that's how we structured it. So I ended up buying 18 properties in a 9-month period. It was an incredibly aggressive growth plan.
Yeah.
To this day, I'm still undecided if it was the smartest thing I've ever done or the stupidest thing I've ever done.
I love it. Go be aggressive.
Because like I said, as soon as we would buy like, I don't know, we'd buy, let's say 15 to 20 units at once. And then, every time we did it, at least 1 or 2 tenants would just move out in the middle of the night. Before you even got a letter to them that we're going to be the new landlord, or, they just were afraid of change. They would just leave. And there's no point of going after them legally, right? It's going to be a waste of your time and money. So like as soon as we would like balance ourselves from the first set, we'd get everything stabilized, I would go buy another set of properties. So it was a really, really chaotic first year and a half. And that took up a lot of my time. Once the portfolio got balanced, once we got into management, so we changed managers about 2 years in. We've been with them for a few years now. Now it's much more smooth sailing.
Gotcha. So when you were in that growth phase, did you have targets for, I want to acquire X amount of properties this year, or was it by quarter? Was it by dollar volume? Like, how did you have targets?
Not really. I had money that I wanted to spend.
That's good.
And I was trying very, very hard, right? I think to me, one of the biggest problems investors has is having money. Because when we have money and it's sitting in a bank account at 0.001% interest, right? We want that money to work for us. So I think I've had to catch myself a couple of times from, buying a deal that was, let's say, below my criteria, because I felt the need like, well, it's a decent deal. It's not great, but it's not bad. And had to really stop myself from doing that a couple of times. To be like, no, I should only do the great deals. And if it takes me longer, it takes me longer. Otherwise, I'm going to be shooting myself in the foot by having that sort of mentality. So that was one of the learning lessons I had. But really, it was about, building the portfolio to where I felt it was enough. And that was also a debatable thing. At the time, my first husband I got really obsessed with it. He would wake up in the middle of the night and I would be on my computer running Excel at like 3:00 in the morning. And he's like, this has got to stop. This has become your entire life. When is enough enough? It was a very good question. When is enough enough? So we had to have a discussion about that and determine, hey, once we get to X amount of rental income, I could back out all the numbers, vacancy, repair, CapEx, all this, all of our mortgage payments, and I think we'll profit that. Like, what is our goal? So our goal was $10,000 a month passive income. I thought we needed about $25,000 a month in gross income to get to the 10. So then we got to that, and then I just kept going and didn't tell them. I was like, well, we'll just throw a little bit of a cushion in here. Maybe my numbers are wrong. But so then I did like another portfolio buy. And then I finally was like, okay, now I'm done. And that was the last time I bought anything. It was May of 2015. That's the last time I bought anything. I then started working with partners as well. So I do have 3 different partners that I work with. We own about 10 properties together. And that I started working with them afterwards. But that was our goal, was to get our portfolio to a certain amount.
Gotcha. And, when you were talking about how you have to hold yourself to that criteria and not get sidetracked with mediocre deals, did you have, how did you frame that in your mind? Did you have set criteria that you plastered on a wall saying, I will not buy unless it's this? Or how did you keep yourself on track?
Well, I use a lot of Excel. So, when we started looking in the market, so Milwaukee was a new market to us. I really had never really been to Milwaukee or spent any time there. So that's a whole nother process of, going to a new market, figuring out what submarket you want, also figuring out what kind of landlord you want to be. That dictates what kind of market you're going to be in. But really, I probably saw maybe 50 properties, myself, before I actually put anything under contract. So I had run numbers on 50 different properties at that point and had them all in an Excel. And then they all have the same, different algorithms applied to them. And then really figured out, okay, what's the cream of the crop for these sort of deals? So I figured out what the cap rate was that I felt, hey, I don't want the average. I want something that's above average. So I think I just went through and figured out, 10% of the properties are in this level of cap rate, and that's what I want to focus on. And that's what I did.
Yeah. And how long, because I really like how you did your homework beforehand, before entering a new market, which I think is a mistake some people do. They just show up and they buy a property in a brand new market they know nothing about. How many months did you, do your homework for? Was it, like 6 months, 3 months?
About 6 months.
6 months, yeah.
So it started off, Milwaukee wasn't our initial first choice market. So we went to a few different markets. And what I essentially did is I called a bunch of real estate agents that, I'd found online, either through BiggerPockets referrals or Yelp, and said, hey, look, I'm looking to invest in this market. I want to buy $500,000 of property. I'm going to come up for the afternoon. Will you show me, right, what you would spend $500,000 on? And then we can go in the car all day and you can show me all the properties and why, right? I want to know why. You like this area because of what? Or you like, and that's how I kind of learned things. So after doing that, then the next maybe month or so, I was up there maybe every other weekend, looking at properties. And then we really narrowed it down to one area. So of the 30 different buildings that I own, I think there's within maybe a 2.5 mile radius of each other. So people ask me all the time, like they'll call me like, hey, I want to know about the Milwaukee market. Like I know nothing about the Milwaukee market. I know my area. That is it. Because then probably 4.5 years ago, I stopped even looking at what else was going on in the other submarkets. All I cared about was my submarket. And then, getting to know people. So buying 18 deals in 9 months is quite aggressive. I started with the actual first deal. First set of deals I did were completely off market. So we were going on a showing. I remember it was a duplex in the front with a coach house in the back, and we walked in, and the agent that was there showing me the property, started talking with the tenant. So how was your kid's soccer game? And then we go upstairs like, oh, I heard so-and-so like won the spelling bee. That's awesome. And like, he was the kind of person that the kind of landlord that I wanted to be. He knew his tenant's name. They had small, chit chat. So when we walked out, I'd ask him like, are you the property manager or the agent? He's like, well, actually I'm the agent, the property manager, and the owner. He's like, oh, do you have more properties for me? And he had said, no, I don't. This is my only one. But my family owns a bunch of properties. So I run the property, like the tenant side of the business. My wife is an HVAC contractor. Her brother is a plumber. The family owns a bunch of properties in the area. And I'd ask them like, well, would you be willing to sell to me? Turns out their mother, who owns all the properties, had just retired and moved to Florida. So they were open to selling. So I bought my first 5 properties through that one lead. The next 5 I did were completely MLS. The next 5 were about half MLS, half I did a direct mail campaign. And that was interesting. I don't like people. So I don't like having really stupid conversations with people. And I felt really overwhelmed with the whole direct mail thing.
Spoken like a true real estate investor.
It was just right. And I said, and I don't live in the area. So that was also a problem, was I couldn't just go there. They're like, hey, I'm looking at the land property. Can you come by tomorrow? It's like, no, it's a 3-hour drive for me. So I lost a lot of leads that way. But I did find 2 guys specifically through that direct mail campaign that I've bought multiple properties from over the years. And they were both very good. Actually, 3 guys. They were like me a couple years ago. They had bought, they built a nice size portfolio, but now they were looking at trading up. So one of them was getting into assisted living facilities. One of them was getting into hotels. And the other one had a fire restoration business that was his focus. So those are like my ideal buyers or my ideal sellers. Those are the guys that, they've run it like a good business, right? There's not a lot of CapEx, deferred maintenance for me to do, right? I don't want to do any of that. I just want to take it over and let it ride.
Yeah. No, for sure. So is there one deal of all the ones that you've done that really stands out as a keystone deal? Maybe one that really propelled you forward, or was it?
Well, the one that propelled me forward was our 3rd property. And that was unlike any other deal that we did, because that wasn't necessarily a buy and hold property. That was an estate sale. It was to be our personal residence. We had just bought a 3-flat. Like 2 weeks later, this property came in the market, and it would have been for us, and our goal at that time was we were going to buy 4 investment properties, and then we would buy a single family house for ourselves. So this kind of skewed our plans. And then it went under contract. We didn't get to see it. No big deal. Didn't think of it. And then about a month later, I saw it pop back up in the market and was like, logically, this is not a right time for us. Like, I don't know how we're going to buy it. I don't know where we get the money from to do this. And it's an estate sale. Hasn't been touched since the 70s. It needs a total gut in the first floor. And so I just ignored it. And then I was cooking dinner, and the agent had called me and said, hey, you expressed an interest before. It's back on the market. And my husband at the time heard that conversation. Like, well, we should just go, and we got like 3 steps into the property. I'm like, we're buying this property. And we ended up doing a live-in renovation, like $100,000 renovation. It was hell. We had stuff in boxes for like 9 months. We had like we were living like off takeout for 3 weeks. We had no refrigerator. We had no stove. But when it was done, it was great. And we had the house appraised. So I think we bought it for $325,000. We put about $100,000 into it. And then 6 months later, we had it appraised for $650,000. So we pulled the cash out of that deal. And that's when we had a lot of capital to go invest in the Milwaukee market. So
Perfect.
we parlayed that and that allowed us to grow for the most part. And then we did a private money loan with family for the second part of it.
Gotcha. So, we were talking about how you haven't sold a property, and you may be looking at doing a couple sales now. Did you ever do any refis along the way?
That was the only one.
That was really?
Mm-hmm.
Well, what kept you from refinancing any of the other properties as you were growing?
I don't know what to do with the money, right? Because I stopped buying in 2015.
Yeah.
And then I focused on my partnerships. And part of that deal with my partners and why I wanted to do it that way was I didn't want them to ever feel like I was choosing the good deals and giving them the leftovers. So my commitment to that was that I was done buying for me personally. And now my focus was going to be building their portfolio with them. So that was part of it. So I don't know what I would do with the money anyways, if I did pull it out. You said, even if I sold, I'm still not sure what I would do with the money. And then secondly, it was about rates. The rates have changed. So again, if I'm going to be increasing my rate by at least 1 percentage point, I better have something good to do with that money and not let it just sit in the bank account at a quarter of 0.001% interest.
Yeah.
And I just haven't had a good answer for that. So that's why.
Yeah. No, that's a good answer. I'm just curious because, you were being very aggressive at the start. So if somebody's going super, super aggressive, there may have been a couple refis. I'm just very curious with that.
Yeah. The aggression or the being aggressive that was getting to our goal. And then, that just was not sustainable long term for my personality. It was go, go, go 24/7. And I needed to have that chill. And that's when I started also making changes into my life of, one of my goals is to travel 2 months out of the year. That was part of the problem was I'd quit my job. At this point now, I've been about 2 years and was like, hey, I quit my job to have a lifestyle and I'm working more than I was before. That completely defeats the purpose of being an investor. So where do I make changes? And that was part of it as well. That's when I got full-time management to handle the properties. Now I just manage the manager and make different lifestyle choices because that's the reason why we kind of get into this, right?
Oh, for sure. So how many hours a week do you think you manage does it take to manage your portfolio now?
Now?
Yeah.
Oh God. 4, 5 maybe?
That's great.
But I've been with my manager for 3.5 years now. We have yelled at each other. We have thrown shit at each other. We've gone through with almost, he does, something almost 85 units for me. Something always happens.
Yeah.
And at this point, we both know each other and his staff knows me as well, that they don't even bring the small shit to me. It's quite rare that I even get like a phone call or an email because he knows what my answer is going to be. And he knows where I'm going to push back on things, so that's part of the beauty of it, is finding someone that you trust and then building that long-term relationship with. I haven't seen him in almost a year.
Yeah.
We talk on the phone and we email and stuff, but I haven't been up there to see him in about a year.
Yeah. And you mentioned getting into the partnerships. Was starting to bring in on partners, was that more of a lifestyle decision? What prompted you to switch over to that?
They had just asked me.
Oh, okay.
There were people that I met through, two of them I met through Bigger Pockets, who had reached out to me and said, I'd be interested in working with you in the future. My response was, great, I'm not ready yet. Here's why. I wanted to build my portfolio, get to where I am. But during this time, let's take this time to get to know each other and see what kind of partners we will be, right? And so I had spent almost a year with both of them. Every month that I would do my own portfolio, I would email them, hey, this month we bought X amount of units. Here's the properties we bought. Here's the numbers we did. Here's the properties I turned down and why. Here's our challenges. And so we had gone through that for about a year before I was actually ready. And it wasn't something that I didn't personally pursue it. It wasn't something that I sought out, but by that point, it's been the easiest partnerships ever because they don't question my judgment. I just send them a report every month, and every once in a while they'll come back with a question, but they've already gotten to know me so much and how I make my decisions and why I make my decisions that it's been a really, really easy partnership.
Yeah, gotcha. And that all goes, now you're working on your partnerships, you're traveling, a lot more than you did at the start when you were just going 24/7 with real estate. Financially, how has building your portfolio set you up for, the long term?
Well, it gives me, that I'm a worker person. There's no way that I'm not going to work. But it gives me the option of choosing what I want to do. And that's something that I technically own 8 companies, but 5 different businesses, all are real estate. And they're all things that I love to do. And so I've been, the first couple of years were building the portfolio. The next couple of years were kind of a transition period where I actually started my own brokerage company in the Chicago market. People kept coming up to me and saying, I want to learn to do what you did. And I'm like, great, I could teach you, and we can go look at properties. But I figured out that really fed my need for finding the deals, right? That's the part of real estate I love. I love the analysis. I love the strategy. I love finding the deals. I actually don't love owning the properties or managing the properties. It's not really fun for me. So being an agent allows me that ability to feed my addiction and get to do what I like to do. So that's when I kind of really transitioned things with my manager over. I stopped. I used to go up there once a month and meet with them. And then okay, let's go to once a quarter and then once every 6 months, because then that allowed me time to spend doing what I loved to do. So that's really been my focus over the last 2 years even, has been understanding what are the things that I'm good at, what are the things that I like to do, and how do I focus all of my businesses to spending the majority of my time doing those things. Whether it be delegating or hiring something out. Also learning not to stress out. With tenants, it's hard, but this whole business in general is very reactionary. I just got a phone call today like, hey, furnace broke, right? It's going to cost X amount of dollars to fix it, or it's going to cost X amount of dollars to replace it. That's a $2,000 expense I was not expecting, obviously. But at the end of the day, what am I going to do? The furnace is broke. It's winter. Can I cry about it? Sure. Can I bitch and moan and complain? Sure. Is it going to change anything? Absolutely not. Right? So suck it up, deal with it, and move on. If you were a smart investor and a good investor, that $2,000 is not going to even be a blip on your radar when it comes to your reserves and your CapEx.
Mm-hmm. I think that was just the quote of the interview right there. Suck it up.
Seriously though, so there's so much you can't control it. What are you going to do? Yeah. Say no, you can't fix the furnace in the middle of winter. That's not going to happen. Tenants brought in bed bugs. What are you going to do? There's no way to prove which way it goes. You have to follow the law, right? And the rules regarding doing those sort of things. And it took me years. Maybe I've been worn down, but years to really realize I should stop freaking out and stop stressing about those things, because there's nothing I can do to change it. Yeah. Right? The only thing I can do is move forward.
Yeah, you can just plan for it because it's going to happen at some point.
Mm-hmm. Yeah, of course.
Yeah. So Brie, you have an event coming up in a little bit. Do you want to tell us a little bit about that?
Sure. The Midwest Real Estate Networking Summit is one of the businesses that I started because God forbid I do anything, and just chill. And that was, we did our first event last year in June. And then this year it's June 1st and 2nd at UIC in Chicago. It's a 3-day real estate conference, but it's been planned to be a little bit different than most real estate conferences. So a lot of our speakers are coming in without any sort of programs to sell. So a lot of them are mom and pop operators, mid-level, investors, who are talking about their real experiences. So that's one of the things that we like to highlight is, hey, being successful in real estate is great, but it's not always an easy path. Right. And we don't necessarily want to talk about, hey, you became a millionaire overnight and I can make you a millionaire too. Right. That's not realistic. It's like our headliner last year talked about how he had 4,000 units and then went $25 million in debt. Right. And lost everything and then had to rebuild himself. Right. And rebuild his new company and kind of pivot what his plans were. Those are a lot of the people that we have come speak. Hey, I thought things were great. And then the crash happened and I was, had to fire 40 employees overnight and had to pivot my business. So we try to bring in real investors to have real conversations with people. And you can find out more information at midwestresummit.com.
Great. And if somebody's looking for you specifically, do you have a separate website?
Sure. You can visit my business website, which is secondcity-re.com, or you can find me on Bigger Pockets or LinkedIn.
Perfect. Well, Brie, I just want to thank you so much for sharing your real estate success with us today. It was great.
Sure. Thank you.
And to our viewers, I wish you well in your journey from purchase to profits. See you next time.